All right, welcome back. Thanks so much for hanging out with us here on the Consumer Quarterback Show. Greatly appreciate all that support the show. You call in, you support our show partners, our expert contributors. You list your properties with the Platinum MVP team. You really mean the world to us. It really, really helps our business when you do that. Supporting local economy, supporting the local area business owners and sales reps and the like here on the Consumer Quarterback Show. Quick shout out to our friends over at Lawn Anglers. Adam Long and his team, they do a great job on all of our real estate properties. So if you're looking for a lawn maintenance company, grass cut company, lawn maintenance, landscaping, mulching, tree trimming, yard cleanouts, Lawn Anglers is the company to talk to. Adam Long, they do a great job on our real estate properties, and we do recommend them. A couple of hot listings here before we get with Jared Parker. We're going to catch up with Jared around the business rent tax, the failed new information out of Tallahassee. Also, inflation numbers came out. So Jared's a local economist right here in Tampa Bay, Regional Economic Consulting. We're going to talk with him in just a moment. Before we do, we always like to feature real estate properties live on air on the show. And we got a beautiful property. This one's in North Carolina. This one's at 530 Heaton Forest Road, Cashiers, North Carolina. And what we do with Keller Williams Realty is we have relationships throughout the world, throughout the globe. And of course, in the United States, we have a lot of great agents. We're the number one real estate company in the world. So we partnered up with Bill DeVore and his real estate team, KW Professionals, up there in the Carolinas for this property. 530 Heaton Forest Road, Cashiers, North Carolina. 11 bedrooms, 10 bathrooms, over 10,000 square feet. It's a luxury oasis in High Hampton, designed, professionally designed property here. 7 spacious bedrooms, 7 lavish bathrooms, complemented by a separate guest house featuring 4 comfortable bedrooms, 3 stylish bathrooms, and the property offers unparalleled privacy and serenity. The epitome of luxury in North Carolina. Beautiful property there, and you are surrounded by a really nice high-end golf course in High Hampton as well. Bringing you back local here at 2156 Masters Court, Dunedin, Florida. This is a condo end unit completely remodeled in Dunedin, close to the golf course as well. 2156 Masters Court, 3 bedroom, 3 bath, 20 square foot condo, beautifully remodeled end unit, 2 primary suites, lots of upgrades, completely recently renovated and updated. Beautiful property right here in Tampa Bay, and you can see all of our listings at PlatinumCoastalElite.com. Check out PlatinumCoastalElite.com. All right, Jared Parker, welcome back, sir.
Oh, thank you for having me again.
My pleasure, man. My pleasure. Always good catching up and talking about the economy. I love discussing the numbers, and you look at the jobs report, inflation. What's your take on where we're at now?
I think what we're really seeing right now is a lot of recovery. Not even recovery, that's not the right word. Just getting back to where we were pre-COVID. Okay. And so especially a state like Florida that had all this migration, all these residents moving to the state, we saw this big boom because remote work became a big a hot item. And now that's starting to slow. We're starting to see the the spigot of people that come into the state slow down. And I think as a result, we're going to see Florida not go negative, but definitely get back to where it would have been if COVID had never happened.
Yeah.
And that's the idea.
Just a little slower appreciation typically, right? So instead of being around 7-8% a year, it's probably going to be about 4.5%.
Oh, yeah. Actually, that's almost spot on as the stuff we're forecasting right now. Because, I mean, when we got really going through the COVID mess, I mean, last year we were pushing 12-13%.
Wow.
And now, towards the end of last year, so we do these in quarters, so we do them 4 times a year. Towards the end of the year, we actually saw that number come down about 8%, and we expect as the rest of the country slows, because the country's not moving nearly as fast as Florida.
Right.
If the country's moving at 2%, 3%, we should be moving at 4%, 5%.
Right.
So still growth, which is great.
And we're talking about the appreciation of real estate.
We're talking about just the general GDP growth of the state.
GDP growth,
yeah.
Okay.
Yeah. And I think on the real estate front, Florida, you're still going to have a housing shortage, which means you're going to have a lot of demand that's still going to be here. It's just, especially, and right now with interest rates high, it makes construction costs expensive. Mm-hmm. So that slows the supply of homes. And even if the population that's moving here slows, you're still going to have that gap between how many people need a home and how many homes are available.
Right.
And it's going to be very thin. Normally, in a normal world, that the vacancy rate for single-family homes is about 1%, 1.5%. Right now, we're looking at about 0.5%, and that's what a lot of the appreciation growth in real estate comes from is
Right.
the shortage.
Yeah, it's demand, supply and demand. Is the number still about 1,000 people a day moving to the state of Florida?
Yeah, it's between 900 and 1,000,
Yeah.
and that should by the 2028 we expect it to get down to about 850 people
Okay.
per day. But the average household size is 2.5, so you figure you need a third of that, almost a quarter of that, in new homes built every single day.
Wow.
And if you need 200, 300 new homes, that means you likely have 300 to 600 new cars on the road. You need the restaurants, you need the retail establishments, you need grocery stores, you need all of that
Yeah.
goes along with keeping those people happy.
Wow. Yeah. Yeah. And that's a challenge too when you get the snowbird season here. The traffic just backs up, man.
Oh, yeah.
We're constantly building, trying to improve the infrastructure. What's your thoughts around infrastructure?
It's tight. We're actually looking at a project down in Monroe County that's considering increasing. They're not considering, it's done every 10 years, but they look at increasing the number of units that can be built in Monroe County.
Okay.
And it's like there's just even if you add another 3,500 homes or 10,000 homes, however many homes, you're talking tight capacity that's left to the infrastructure, and it's everything from utilities, water, and roads. So it's kind of the whole gambit. And when it comes to visitors, and specifically with tourism, we get about 145 million, 150 million visitors to the state every year.
Wow.
That equates to about 1 million to 1.5 million new permanent residents that are on the roads at any point, at any given time.
Wow.
And then by the end of the decade, we expect that to go up to 175 million. So you're probably talking close to 1.5 million, pushing upwards of 2 million equivalent permanent residents.
Wow.
So it's infrastructure's tough, and to plan this stuff out, they have a trust fund in Tallahassee called the State Transportation Trust Fund.
Mm-hmm.
It's a 20-year deal. They look at how much infrastructure we need 20 years from now.
Wow.
And they start planning it today. Well, you go back 20 years ago, that's 2004, they didn't see COVID happening. They didn't see this huge influx of people. So
Right.
that's where we're seeing like the disconnect between
Right.
the roads and the people that are moving here.
Yeah.
It's just going to take time to get around to contracting those new projects to account for the new population moves.
Wow. We're talking with Jared Parker, Regional Economic Consulting Group right here in Tampa Bay, and doing projects, doing studies across the state. But yeah, to that point, back in 2004, so you mean to tell me they didn't see lockdowns, they didn't see mandatory jabs, they didn't see Antifa riots, they didn't see all this coming, and that caused more people to move. More people to move to our state in droves. I mean, people are fleeing New York City. I mean, look what they're doing to President Trump up there, and a businessman running a business. They make up a charge, prosecute, have a bench trial, and then say, hey, well, here's millions of dollars that you owe. I mean, if they do it to him, they could do it to anybody. So that's driving a lot of it, right?
Ton of it is driven by taxes too.
Taxes.
I mean, it's you pay. There's no state income tax in Florida, so that automatically saves you. I think the average is like 5 to 7% income tax for a state across the country. So all of a sudden you're saving money there.
Yeah.
Then you've got just higher property taxes. You got huge cost of living. Even with all the growth we've seen coming into Florida, even our average housing price isn't really that high compared to the rest of the country.
Right.
It's right at average or a little bit below average.
Right.
So, yeah, it's getting more expensive to live here, and it's growing faster than anywhere else in the country in terms of the cost that's growing. But at the same time, we're still about average. And when you compare it to above average state of California, New York,
Yeah.
it only makes sense to leave and move to a place like Florida.
Absolutely. Cash in, cash the tokens, give me my money back, and bring it down south. That's what a lot of people are doing. They're just saying, look, there's too much value here. The absence of a state income tax, the lower crime rates, of course, the sunshine coming down to Florida. There's a lot of reasons why people are moving here. What do you see happening in the future? What's the 2024 unveil and beyond?
In terms of the economy, just in general.
Yeah, general. Yeah.
I think there's still just so much potential here. Even as we get back to what a normal view looks like, it's a normal view for Florida. Mm-hmm. And Florida is one of the fastest growing states, if not the fastest growing states in a country that's still outpacing Europe and Asia. So it's if you're the top of the top.
Yeah.
So the outlook's good, regardless of how much we come off of COVID and how much we come off of all this economic distortion that we've seen over the past few years. We're still going to have high employment. We're going to have huge income migration to the state. We're going to have just everything. I mean, everything that comes along with that. So when you get for example, financial companies that are leaving New York because of that high tax burden, and because it's not the safest state in the world anymore, or ever was. But regardless, when you get those financial jobs coming down here, they're going to bring all their money, they're going to bring all their tastes, and that's just going to kind of proliferate. And that's going to be the story of Florida for the next 10 years. At a minimum.
Yeah, it sounds definitely plausible. I mean, that you look at the advantages here. And what about Tampa Bay? When you think about Tampa Bay, it's interesting because we don't have that many Fortune 500 companies based here, and we don't have that many even billionaires. I think there's like one or two in this area, right? I mean, it's interesting. Yeah,
it is, and there's kind of two nexus points of growth in Florida. Tampa is one of the two. South Florida is full. That's a big issue. You can't really go into the Everglades anymore, and the congestion and the population density in South Florida, you're talking 7,000, 8,000 people per square mile just in Miami.
Wow.
So up here, we're much lower. I mean, I think we're closer to about 1,500 to 2,000 on the high end.
Yeah.
So Tampa has a lot of room, and you drive up in Wesley Chapel, West Chase, North Tampa, and south, towards Apollo and those areas. You've got open miles of new development land.
Right.
So because of that, that's going to attract a lot of people here. Eventually, as those incomes migrate, as those jobs come in, it's going to create the attraction to bring in the bigger companies and the larger Fortune 500.
Yeah.
Because they're only going to come in if they can find the workforce.
Yeah.
And the workforce first has to get here. It's kind of like a chicken and egg. What comes first, the supply or the demand? And typically, it's the supply that facilitates the demand on the business side.
Supply of housing?
Supply of jobs. Supply
jobs.
of workers.
Okay, so that's why industrial is important. That's why warehouse is important, and retail, and right. I mean, it really is when you look at the residential, the commercial, all the different. It's such a unique mix, and it's got to work together. It's got to be synergistic and a good fit.
Yeah, absolutely. And I mean, a lot of the growth we're seeing south of the Bay, like the Bradenton area, it's first what they do is they want to build apartment complexes. They want to build condos. The second you build those condos and apartment complexes, people move in. And if you're building a higher-end apartment, you're going to get a higher-end salary. And that salary is then going to spend more in a restaurant. They're going to spend more in retail. They're going to spend. And you're going to get workers initially that go to those apartments and those condos that might be commuting to Tampa. But it's not far down the road that an employer sits there and says, well, why am I spending all this money to rent a location or buy a building in Tampa when I can move it and cut my costs and save my costs by moving to Bradenton?
Yeah.
And that really kind of the impetus that spawns economic growth.
That's interesting. Good stuff. Let's take a quick break. More with Jared Parker coming up here, Regional Economic Consulting. We're going to talk about this business rent tax and what recently happened up in Tallahassee with that. Business rent tax failed. So we're going to talk about that here coming up. Jared Parker. Also, find out more about the Great American Cigar Tour coming up with Sebastian Gorka coming up here as well. Consumer Quarterback Show, consumerqb.com.
Hey, I'm Ken Shamrock, and you're here with Consumer Quarterback Show. And I say, Brandon Rhymes, knock out your competition.
To get in touch with Brandon, call 727-263-3707. Online at consumerqb.com.
Patriot Mobile is America's only Christian conservative wireless provider who shares your values. They offer the very best nationwide coverage on 4G and 5G LTE networks and exceptional 100% US-based customer support. Patriot Mobile offers discounts for veterans and first responders, NRA members, and families with multiple lines. Learn more at patriotmobile.com/consumer QB. That's patriotmobile.com/consumer QB. Or if you'd like to give us a call, you can reach out at 727-263-3707. That's 727-263-3707. And we'd be happy to tell you more about Patriot Mobile. Selling commercial, vacant land, or residential properties? Don't leave money on the table. List with the Platinum MVP team at Keller Williams Realty. I'm Brandon Rhymes. You can reach me at 727-263-3707. Call or text 727-263-3707. Online at consumerqb.com.
You're listening to the consumer quarterback, Brandon Rhymes, cutting through your typical media nonsense and offering you a rational and unbiased perspective on current events and life in Tampa Bay. Online at consumerqb.com.
Hey, we're back. Brandon Rhymes, Consumer Quarterback Show, powered by the Platinum MVP team at Keller Williams Realty. Quick shout out to our friends at Satellite Phone Store, sat123.com/REQB. If you haven't got your satellite phone, all I can say is you should probably have one. It's an election year, folks. Sat123.com/REQB. Get that satellite phone. There's your URL for a discount like real estate quarterback. So sat123.com/REQB. Get that satellite phone in your hand. A couple of hot listings here from the Platinum MVP team, always featuring our properties in ways that other real estate companies don't. And we're getting you more exposure for your listings. 232 Hardcastle Place in Valrico. We got a nice entry-level home here in Valrico, Florida. This is a townhouse. You have a beautiful community pool, plenty of parking at Hardcastle Place in Valrico. 2 bedrooms, 2.5 bath, bonus room, 1,560 square feet. Granite countertops, beautiful property, 232 Hardcastle Place in Valrico, Florida. One of our hot listings out in Hillsborough County. Also got a Safety Harbor home here for sale, 300 6th Street North, Safety Harbor. This is unit number 6, and this one is another it's a small little condo community here. You got only 13 units in there, open floor plan, 2 bedrooms, 1.5 bath, just under 1,000 square feet. And I love the backyard view here. You have a screened-in pool or a screened-in lanai, and you got a kind of a forest scene there. Beautiful creek running through. You got oak trees, palm trees, beautiful property here, and a community pool also in the center of the structure there. 300 6th Street North, unit number 6, Safety Harbor, Florida. You can see all of our listings at PlatinumCoastalElite.com. Check out PlatinumCoastalElite.com. All right, so get ready. Tampa Bay, AM 860, The Answer, and Wired Differently proudly present an evening with the one and only Dr. Sebastian Gorka. Join us on Tuesday, March 19th for an unforgettable discussion on politics and life, all while indulging on the finest cigars. That's right. It's an exclusive event you don't want to miss. Join us at the Corona Cigar Company in Tampa. Doors open at 6:30. Reserve your spot now for an evening filled with insight, laughter, camaraderie at theanswertampa.com. Get your tickets from theanswertampa.com. I'll be there. We'll have 4 or 5 of our friends with us as well, show partners there as well. All right, Jared Parker's in the house. Jared, we have this business rent tax that was so what was it? Set the stage for us there.
So they have it's called business rent tax. They have another word, commercial sales tax, commercial rent sales tax. Anyway, it's a sales tax on rent is what it is. And a couple years when going back to COVID, because everything surrounds COVID now. Yeah. They had the unemployment trust fund depleted in the state, because so when people filed for unemployment due to their job loss because of COVID, they could go file for unemployment, and there's a fund that pays it. That fund emptied. So we then, a couple years ago, we wanted to include the state wanted to tax internet sales, or at least collect taxes on internet sales that were already taxed.
On internet sales?
Internet sales tax. Okay. So to make that happen, the legislature said, well, let's make it budget neutral. We don't want to increase taxes. So let's start cutting the commercial rent tax as the trust fund fills up because of this money coming in from internet sales tax. Okay. So you have money coming in from internet sales tax. It goes into this trust fund. As the trust fund goes up, commercial rent goes down. Okay. So it's like a 3-part.
Rent tax goes down.
Rent tax goes down.
Okay. So
this year we saw that the unemployment trust fund was just about full, and we said, well, let's go ahead and just cut the whole thing. Instead of this scheduled slow decline in the tax rate that we've been seeing over the past couple of years, we said, let's go ahead and cut the whole thing. It was about about a $976 million cost to the state, but in return to getting rid of that tax completely, companies, on average, the guys that pay the business rent tax, they're most of the money is paid by about 20% of all the taxpayers for this particular tax. And on average, they were going to be banking anywhere from $300,000 to $3 million in savings off of this per year. So we said, if they have that in their pocket, what can they do with it? Can they go out and spend it? And we said, sure, they would leverage it, and they roll it into portfolio expansion. So building new restaurants, building new apartment complexes, condos, so on and so forth. And at the last minute, we were looking at, I want to say it was about $2-3 billion in economic development tied around doing this. You're talking things like paychecks to employees, for construction workers, building these portfolio expansions.
Yeah.
And then you're looking at all the new residents. It's that compounding growth that we were talking about earlier.
Right.
Anyhow, the last minute, the legislature said, no, we're going to go ahead and keep the tax in place. So unfortunately, our tax cut failed. Wow.
Interesting. Yeah, so there's a lot that goes into those decisions. And you think about just the simple rise in interest rates, right? Mm-hmm. That's a big talk of the town right now, or talk of the country, is the rising interest rates. Why do you think it's staying where it's at? And then talk about those inflation numbers as well.
So yeah, a couple things with the inflation came out. Normally, what the Fed tries to do is they try to target about 2% inflation, and we look at it month to month. So we sit there and say, over the last 12 months, how much has inflation grown? And then when you report the next month, instead of reporting, well, this is 4% annual rate, we look at the growth between, say, January and February.
Okay.
So the growth between December and January, February, March has been going up. And that on average is pushing that annual target of 2%. It's pushing the Fed out of that range. Mm-hmm. So the Fed's only going to cut if they think that rate gets low enough, if it's on the right trajectory.
Yeah.
So we had the inflation report came out last month, and that was, I want to say it was 0.3%, 0.4% month to month. You figure out 0.4% times 12, you're looking at 4.5%, 4.8% inflation growth when they're looking for 2%. So that made the Fed uneasy, and a lot of it was tied to shelter costs. So housing was a big driver. It drives about 30% of inflation.
Wow.
And then this past month, we just had the new inflation report come out a few days ago. Again, it was high. I want to say it's like 0.4, 0.5% between month to month, which then targets that 4.5% to 5% growth that the Fed doesn't necessarily want to see on the year. They want to get to that too. Yeah. Now the inflation driver is tied to energy, and it's still tied to housing because housing is still, prices are going up.
Yep.
So how the Fed interprets that and what they do with it is anybody's guess.
Yeah.
I mean, originally I think the market wanted three rate cuts.
Right.
And the Fed was signaling, maybe 2. Well, now it might be 1.
Yeah.
So we'll see what they do with that interest rate.
Yeah.
But on the flip side, the second that interest rate, they do signal they're going to do cuts. There's so much money, there's so much cash that has been reserved on the sidelines in the economy, just between companies sitting on it, between companies not expanding, not hiring, just stocking up on cash in case a recession might come, which doesn't look as likely as it did.
Yep.
That's a lot of pent-up demand, and you would expect the second the Fed signals that, we're going to start cutting rates, you're going to get a huge explosion in just spending.
Right.
Economy-wide.
Yeah, I see that happening, and also, too bad we're out of time here, but I also see the commercial industry being impacted by the potential for defaults as well in commercial space. There's potential for that as well.
Oh, absolutely.
Yeah. All right, good stuff. How do you want people to connect, Jared?
Always go to our website, regionaleconomicconsulting.com. That's the easiest way. There's a little contact us button, and we can reach out.
Regionaleconomicconsulting.com. Jared Parker, thanks for coming in.
Thanks for having me.
All right, my pleasure. Hey, another great show. We had Captain Will Smith in studio talking about the aviation industry and all that was happening there. And, of course, Jared Parker. Want you to please go out there, consider committing a random act of kindness, support the local economy, supporting the Consumer Quarterback Show online at consumerqb.com.
You've been listening to The Consumer Quarterback, Brandon Rhymes.